everyone, welcome to another episode of In Conversation by Advisorkhoj. Today in conversation, our guest is Mr. Rohit Mattoo, National Head Retail Sales with Axis Mutual Fund. Rohit has over 20 years of experience in financial services industry and has joined Axis Mutual Fund in September of 2023 last year. Welcome Rohit to In Conversation by Advisorkhoj.
Thanks a lot, Suren. Always pleasure to talk to you. Obviously, when we met personally some days back, we did discuss that there are lots of stalwarts of the industry to which I look forward to. And obviously, you're one of the friends, dear friends now, who has
Thank
always
you.
been helping, guiding, and obviously letting me come up the curve at a very, very fast pace.
Thank
Thanks
you
a
so
lot and
much.
pleasure to be
Always.
with you
My
today.
pleasure and our pleasure. So Rohit, to begin with, my first question is, it's been about a year you've been with Axis Mutual Fund. So what has been your experience being in the mutual fund industry? Some observations which you made in these around a year or so?
So, to be very frank, it's a very, very fascinating industry. If you ask me today, 20 years down the line, if I had an opportunity to be on that side of the, business to what I am doing now, I would have hands-on taken it. What I now believe is the sunrise industry. What has happened in last 1 years of my travel across industry, meeting partners, be it banks or distributors, it gives me that confidence that the way people are looking at the business, the kind of opportunity they're looking at, it's not anymore a timid society which we used to be so many years back. We never had that confidence in ourselves also, but today when we go out, there are lots of partners. They are also very confident that India is poised to grow. And all the data points, all of us know, the industry knows that most of the data points are suggesting that this is an industry which is just scratch the surface. If we
True.
feel that 60 lakh crore AUM is a big AUM, I think we are fooling ourselves. We are nowhere where we are going to go in next 10 years. I tell this to people that we are going to get a big tsunami. It is up to us whether we want a glass of water out of it, a bucket of water out of it, or many trucks of water out of it.
Very true.
It's up to us. Opportunity is immense. Positivity is there in the minds of distributors as well as clients, and that tells me that yes, this is an industry which will do really, really well. It's fascinating, and the fact that it's not only you growing, but you are ensuring that the clients and the partners are also growing at the same time.
Absolutely.
So I think it's a very noble kind of a business, which I believe, because I think in last 5-10 years, the way we've ensured lots of retail participation happens, and actually retail makes money or creates wealth, is what is more fascinating to me than anything else. This is the easiest way of investing. I think AMFI and all the regulators have done a fabulous job in insulating any shocks, us from any shocks. And I think that's the step in the right direction. And I think this industry will matter a lot, and it will create lots of more good stories in the minds of the investors and all of us. A very fascinating story for me, if you ask me.
Absolutely, totally agree because this industry, in fact, I've been saying this for years that this industry is still a sunlight industry.
Yeah.
It's about 4.6 crore unique PAN
Yeah,
investors,
yeah.
the number of PAN card issued, etc. The penetration, yeah, absolutely, sky is the limit
Yeah.
for mutual funds in India to be.
Correct. That's what our belief is, and that's what the confidence is there. That
Absolutely.
next 5 to 10 years, you can have one of the best unprecedented runs in terms of the number of clients who will come on the fore, the way the AUMs will grow, because we are poised right now. I think lots of things. There are lots of tick boxes which are ticked in the right direction. It is just up to us how we ensure that we tick all these things under our control and work in the right direction to get the maximum benefit out of it.
Absolutely. Totally agree with you. So, Rohit, you're launching your Access Consumption Fund on 23rd of August this month.
Yeah.
So could you tell our viewers in terms of what's the strategy of your Access Consumption Fund and why a consumption fund now?
So for the why, I would say what has happened in last 3-4 years that we've seen the unprecedented run on the markets, right? But what has happened is the market, there was a broad-based rally which has happened rather than concentrated rally. And consumption as a sector last 3 years hasn't participated in this rally. We believe that this is a very, very opportune time, and that sector will start delivering well. One, because of the various initiatives which government is taking, and at the same time, there is a cyclical factor which comes into the market. When one
Right.
sector doesn't work for 3-4 years, usually over a period of time, there's a time correction which happens, because of which that sector becomes a little better in terms of value proposition. You see that, playing off. And at the juncture where we are in terms of market right now, we believe that consumption is a very, very, it's a defensive sector. All of us know that, because obviously consumption has a majority weight in FMCG. And last 2 3 years, FMCG hasn't delivered returns at all. While as the capacities are getting built, ROEs are better, your EPSs are growing. It's just the time correction which is happening, and we believe that this is the right time when we can get into this theme, and which will help us over a period of next 3 to 5 years time to generate little better returns than what a broader market will generate, because that's what the house view is.
Sure.
That's why consumption right now, because we still believe that it's a value right now to get into it. And we have a huge amount of universe to pick from. It's although consumption, when we talk, it looks like it's a thematic kind of a fund, but to be very frank, we believe that it's a very, very broad theme, because FMCG in itself is a very, very broad theme
Mhm.
with many stocks which are available.
It is, yes.
Apart from consumption, FMCG, it's not only FMCG. Then you also talk about automotive, you also talk about consumer durable, you also talk about telecom, reality, power. So it's a very, very broad theme, almost 8 sectors, 70 industries. So it
Yes.
gives us that confidence that it's a very broad theme which we want to play in these kind of markets. We don't want to go with a very, very narrow theme. And that gives us that comfort that we can, obviously, we'll be able to identify those 60 70 stocks where we have a long-term view in terms of 8 to 9 years, and then get into those stocks.
Absolutely. And the kind of budget you've also seen, it kind of endorsed it.
Yeah,
The kind of push on the infrastructure, the capital expenditure, the agri expenditure, as well as the rural. So
exactly.
there is a lot of course, thrust in terms of the overall job creation and hence the consumption across the various sectors, like you mentioned.
Yeah.
So why should,
Yeah.
sorry, go ahead.
So to add to that, India is poised to have 4 trillion consumer market by $4 trillion consumer market by 2030. So as you said rightly, in the budget also, government is also playing lots of coming up with lots of policies which give consumption a big push, because your bottom of the pyramid is what was not driving us in last 1 or 2 years. Although the GDP is doing really well, but GDP was doing really well on the back of government spending rather than consumption going in. While as on the GDP side, if you see, if consumption plays, the share of consumption is almost 55%. So end of
Yes,
the day, if consumption doesn't pick up, the GDP will not be able to do
absolutely.
what it has been doing for last 2 3 years. So for government also, it's very, very important for us as a country. If we want to grow, we have to ensure that we create more jobs, we create more avenues for people to get productive. And once that productivity goes up, people have incomes, higher incomes, obviously that leads to more consumption at the bottom of the pyramid.
Absolutely. Absolutely.
Apart from that, there's one more very, very important factor which all of us have to understand. India today has crossed 2200, 2500 per capita GDP, right, in terms of dollar terms. And the history tells us, whenever this kind of thing happens, any economy, large economy which crosses $2000 per capita income,
Yes,
suddenly there is a surge in next 10 years. The history tells us some of the countries grew within 10 years almost 4 to 5 times. let's
absolutely.
let's assume India doesn't grow by 4 to 5 times, but even if we grow by say 3 times by 2030, 35, that's what most of the projections are saying.
Yes,
We'll be at a per capita income of almost somewhere around 7,000 odd dollars. When that happens, you'll have more and more discretionary spends going up, because beyond a point, roti kapda makan, which used to be a basic necessity some years back, you go beyond that. You want to upgrade your experiences, you move towards the premiumization of the economy. So your spends on the basic need goes up by hardly 10 12%,
hmm,
while as your spends on the discretionary spend goes into times, say 7 to 8 times.
correct.
That's the kind of effect higher per capita GDP entails too. And that's why we believe that next 5 10 years you can have a secular demand expansion happening, because of which obviously lots of manufacturing capacities will have to be built in, and obviously then only this demand will be taken care of. So
Very
it'll have
true.
a huge ripple effect on the entire economy per se. So we
Absolutely.
believe that these are some of the factors, favorable demographics, premiumization, digitization, and obviously we are also sitting at a time when there is very ease, there is a ease of getting credit.
Mhm.
What used to happen when we got into our first job, I'm sure none of us thought that we'll buy a phone which is worth 1 lakh rupees.
Mm-hmm.
Because we had limited means, never thought in our life that we'll take a loan and buy a phone. Today,
Yeah.
a new student coming out of a college, getting into first job, the first thing he wants to buy is an iPhone, because he goes to a store and wants to buy an iPhone at a zero interest loan.
So
So
true.
there is a easy credit available. So these things are driving premiumization. These things are driving this consumption. That's why we were very confident next 5 to 10 years, consumption as a theme will go up multifold, and this will help us to ramp up the numbers on other
Sure.
segments.
No, no, I totally agree. And it is expected that GDP per capita by 2030 should be $4,000
Yeah,
for India. And it will certainly give a lot of tailwind to the entire consumption move as we speak. Correct.
exactly.
So, extension of the question: why should investors and distribution partners look at or consider your Access Consumption Fund? Therefore,
I think Axis has always been known as AMC, which has always kept investor interest at the fore. We could have also come up with some narrow themes, because obviously right now you are in a situation where lots of NFOs are coming. But then we are very, very clear that we don't want to take bets which are very, very narrow, because you're taking much higher risk to ensure that, to generate that extra return. So right now, I can tell all the investors and all the distributors and partners is that for us, customer first as a philosophy will always be there. We will not compromise on our quality as a focus. We are very, very clear that come what may, we will never compromise on the kind of management we are getting into, the kind of faith we are having in the management, and then only we will ensure that we get into those stocks. And obviously the pedigree which we have, last almost 15 years now, the kind of funds we were in most of the cases we were the early movers, coming out with themes which really did play out well. For example, our manufacturing fund, we were amongst the newer manufacturing funds, we were
mhm.
the first one which came to the fore in December last year, and after that we saw many manufacturing funds also coming up. But we were the first manufacturing fund in this lot of manufacturing funds which were launched, and that has done really well. And again, our belief that time was very, very clear that the way government is spending on creating infrastructure, creating manufacturing capabilities, ensuring hard assets are created, it will boost the manufacturing sector big time, and that played out really well, and we see the kind of returns we've given in that fund. So I think that is the pedigree we have a very, very strong foundation, we have a very strong parent, obviously, so a big goodwill to take care of. So you can say that we are somebody clients can trust their money with us, and that's what we take pride in, that for
Yes.
us, customer first, obsession with the customer first is something which we're very, very clear about. And with partners, we've always been associated with them. Today also, the distribution side of the business is much, much larger and bigger for us, and that's how we've been very fortunate to get that support from all our distributors, and we thank all of them. I keep thanking them always that they've made us what we are, because we are one of the youngest AMCs on the floor. And after being there, getting commissioned in 2009 and being amongst the top 10 speaks the volume, that the kind of support we've got from both our investors as well as the
Absolutely.
partners.
It's
So for
commendable.
that, we keep thanking them always, and that's what it is.
No, it's absolutely commendable, the kind of growth which the fund has seen, Access Mutual Fund has seen. So, what are some of the initiatives which you've taken to better connect or widen the connect with distribution partners, either offline or on an online basis?
So two, three things, Swain. First of all, obviously, we've increased the number of branches from last year to now. We used to be some 65, 67 branches, and today, as we speak, we are 84, and we have another 8 to 9 branches which are upcoming, will be commissioned in next 3 to 4 months. The work is already going on. So we'll take our branch network to 100, and we plan to take it to even further levels, because at the end of the day, we believe that for us to increase our retail franchise, we need to have presence on the ground. So we were obviously we didn't have a big, large branch network to support our partners on the ground, but then we are working over time to ensure that we increase our reach to the tier 2, tier 3 cities. We were fairly covered in the top 8 cities, but obviously beyond that, we were not that well covered. So we are taking steps to take care of that. Apart from that, we last year, for example, we done a fantastic program called Extraordinaire Masterclass. So
Mhm.
what we used to do, every Saturday of the month, there would be some motivational 1 hour class without any break, every Saturday or every week, almost 48 Saturdays last year. we had 500 to 600 advisors coming on that masterclass, and there were industry experts, there were industry stalwarts, people who have become, garnered bigger AUMs. They came on the platform and told people what are the do's and don'ts of what are the mistakes you make at the beginning, or what are the mistakes you make once you reach some stage. That really really resonated well, and we also got some of the prominent speakers from the industry as well as non-industry to motivate them. So we had lots of motivational speakers also. So that was one of the engagements we started doing with our advisors. Apart from that, what we also did last 1 month, on the offline side, we had this knowledge series of events where we called region wise, we called some 250 partners to those conclaves. And we had our fund management team, CIO, CEO, everybody talking about the vision and how the markets look like. We also had some prominent economists talking about the economy, global economy, macros, micros. So lots of things were there. We connected with our distributor because obviously last 1.5 years, we had some gap in terms of how we engage with our partners. We wanted to bridge that, and we are now ensuring that we do it more regularly and more on a consistent basis. Apart from that, obviously, we keep doing our lots of work on the MF Connect, which is an app which we give to our partners. We are trying to improvise there on a large scale. Lots of new initiatives are being talked about, which will make life much easier for our partners to connect with us and also to do seamless transactions, look at fact sheet, get statements. There are lots of things which we are developing, and it's still work in progress. But then endeavor is that next 3 to 6 months it should become one point contact for all our distributors, and it should be an ease with which they work with this rather than contacting any RM. Obviously the RMs will be there to support, but then it should be much easier for them to use this interface, both in terms of acquiring more clients, selling more of these products, and obviously becoming big.
That's a lot of on the ground work actually, which has happened in the past 1 year.
Yeah, lots of it. And obviously, as I said, we've had our issues. We all know that. I think we've come a long way from there. Whatever happened was unfortunate, but I can assure all our partners and all our investors is that we've gone overboard. We've taken all the action which was very necessary. Some of the actions were very stringent, and we've, I think, guarded ourselves from all the corners. Few examples I'll say. There were few of the roles which were intertwined, like CIO CEO role was together. Now we have a separate CEO, separate CIO, and lots of strength has been built at the top management, because our aim is to become a amongst the top 5 AMCs in next 3 to 5 years time. That's what the aim is, and for that we know that we have to take care of our the environment, ensure that we don't have any slippages. For that we've created a very very robust structure which will help us to go all out with confidence in the market and try and garner as much AUM as possible. So that's why I think those decisions were important, and they are steps in the right direction which will help us to grow faster.
Absolutely. Certainly a lot of reinforcement of the trust.
Yeah.
As well as a very, very solid ground connect.
Correct.
Fantastic. So my next question is pretty much related. When we look at Axis MF as a brand, it's a very, very well-respected brand. So how do you symbolize the brand to investors and distributors?
So as I said earlier, Suren, for us, customer first as a matter of principle is very very important. And being from a bank, bank being a partner and a parent, that comes within that trust, that customer obsession, that service quality, delivery. These are few of the things where people will always relate us with, and that's what we take pride in. We are very very clear that for us we will not come up with anything which doesn't go suit with our customers requirement over a long period of time. It will always be a theme or a product which we think will work really well and give risk adjusted return over a period of time, and we're not taking undue risk on clients money just to generate a small bit of alpha. So that's why we as a AMC are recognized as obviously customer first, second quality obsession in the way we invest. We are very very clear that that's something which is very dear to us and we will follow it. Yes, we have done some changes here and there in terms of the way we used to manage our money. We used to be very highly concentrated. We have reduced our concentration. We used to have lots of overlap in our top funds. We have tried to reduce that overlap, because end of the day we realized that you don't want to be only the first number one fund, or because if you do that, there's a higher chance that you'll be very little volatile in the way you work.
Absolutely.
We want
Absolutely.
more consistency. We want to be a number one, we want to be a quartile one fund for sure, but we may not take additional risk to be that quartile one fund. We want to be a consistent fund. That's what we want to resonate with our clients. And we are very, very happy and lucky that we have a trust of 1.26 crore investors with us today. We are one of the most retail franchise you can talk about in the industry today. That gives
1.26
us that
crore.
confidence. Yeah. So
That's a
that
good
gives us
number.
that confidence that despite, our bad times, the clients, portrayed that trust on us. The distributors, the fraternity, gave their thumbs up to us that yes, whatever we are taking, the decisions are being taken, they're in the right direction. And they've given us that time to come back. And end of the day, being in the industry, all of us know that returns over a period of time, it's a cycle. They
Absolutely.
will come back.
Absolutely.
But the fact that most of the distributors stayed along with us, stayed with us, gives us that confidence that yes, over a long period of time, we will carry on the legacy. And we are now ready to, start we are sitting on a launch pad and ready to just fly high. And we think that lots of foundation work has happened. Gope has, done lots of hard work on the ground to put up structures, processes, people. And now it is our responsibility as a team together to take AMC to the new highs. That's what we believe.
Absolutely. Brilliant. Brilliant. So, Rohit, today, through this in conversation, what message would you like to give to investors, mutual fund distributors, and advisors, particularly about your Access Consumption Fund?
So I would want to urge all of them to start looking at this NFO, because we think that the timing is right. We think that we are calling this theme a little early than maybe some of our competitors will. And we feel that this investment over should have a horizon of 4 to 5 years, because that's what in any equity fund we would want our clients or partners to get clients in. And we are very, very confident that this as a theme will do well in next cycle of uptrend which we see. And at the same time, what we have seen in any of the drawdowns, when markets go down, consumption as a theme, as an index will go, it's insulated a little bit. I'm not saying it will not go down, it will also go down, but then it will be lesser than what the market will go. So it's in that sense a little defensive sector as well. And looking at where we are in terms of market valuation, I think this is a very, very right app theme to be in, and it gives us that opportunity to diversify our portfolio also a little bit.
Sure, sure, sure. So just for our viewers, the Access Consumption Fund is opening on the 23rd of August of this month. So, well, Rohit, thank you very, very much for joining in today and giving your wonderful insights about your journey, your experience of 1 year joining Access Mutual Fund, and of course about this Access Consumption Fund, and what all, the wonderful ground connect which has happened in the past 1 year, the hard work which has happened in the past 1 year, and which is very true, because the reflection, the trust which the brand projects is amazing as well. So our very, very best wishes to you.
Thanks a lot, Suren. Thanks a lot. Pleasure.
And all the best for the NFO as well.
Thank you very much.
Thank you very much for joining.
Thank you. Thanks. God bless.
Bye.
Bye.